All right, happy Thursday, everybody. Welcome to today's episode of Crypto with Chris. So today I'm going to take a look at some price action, I guess, from Monday. And then this time I thought I might sort of present my observations, both with a bullish bias and a bearish bias, and sort of, look and see how that can skew your thinking and see how your interpretations of a chart might differ. So I thought that might be kind of a fun exercise. But of course, before we get into that, all the reminders, follow my Twitch channel here so that you can comment in the chat. Follow my YouTube because I can't store any of these videos on Twitch more than 7 days. So everything goes to YouTube after that. And also follow my Telegram alerts channel where you get alerts for all the shows that I'm on. All the links to all these channels is in the description of this video and all the videos, and also in my general Twitch channel description. So with that, let's get started. Also, I'm kind of battling a bit of a head cold today, so I'm a little under the weather, but hopefully I won't sneeze or whatever. Anyway, all right, I'm going to start with the Dixie here because this is kind of really the story of the day. So, and you'll see why in a second. So basically, we've had a bit of a red candle today, and we've got a bearish divergence flag that's popped up here on the daily. Also, we've had a slight bump in global net liquidity, but really, we've kind of been looking at this for a long time, feeling like this was a long time coming. We've had 10 weeks in a row now, solid, of just mega upside, and it's interesting how if you look at these. A lot of these candles would start in the green, and then they would wick way down, and then finally come back and close on the green. Whereas this one, alternatively, it hasn't really wicked down at all this week. It just pumped up, and now it's kind of reversing a tick. Another thing that I've noticed is on the daily, looking at the RSI here, I'll just kind of zoom in on it real quick. It's been kind of pushing up against oversold territory for a while now, but finally just in the last 2 or 3 days, it really pumped up above it, and then has quickly been pulled right back down. So obviously the Dixie is overbought, rather. I said oversold a second ago, overbought. So we've been kind of anticipating a correction here. And what happens is when the value of the dollar goes down, automatically everything else is worth more dollars. So if you look at stocks, stocks are all up today. If you look at crypto, everything is up today. But you could argue they're not necessarily up. It's rather the dollar is down. So the denominator has gone down. Thus, everything else is automatically worth more dollars as a result. So that's really what we're seeing here. And it probably will continue to come down for a bit longer. It could, if we look at the weekly, it's still in an uptrend, but I mean, it could honestly come back down and settle back down at this bull market support band. This also, it could come down just back to this sort of level here that it has basically flipped. It could retest this level here where it broke out earlier this week, and then just kind of flip this to support. So it might not come down very much at all. Also, ultimately, it's going to be dictated by liquidity. And on the weekly, liquidity is still net negative. So even though we've got this big kind of, green candle on the actual dollar index, liquidity is down. So it could still keep going, basically. I just kind of wanted to open with that and touch on that because that's really what's driving the price action that we're going to dig into, like, as we look at Bitcoin here. Yes, Bitcoin had a big, it's funny. So Bitcoin had a big spike up. Ultimately it kind of came up and touched the top of these Bollinger Bands here. Whereas if we go back to the dollar index, it directly coincides with this spike up, and then, the dip back down, like it's kind of lost some of its oomph. Same thing with Bitcoin. So yeah, basically we're looking at a few different levels of resistance right now. So we've got this trend line that, it's kind of come right back down and settled right at this trend line. Another interesting thing that I drew as I was poking around earlier today was this. I wanted to kind of look at it from like a horizontal level too. And so I was kind of noticing this area being strong kind of support resistance. And so I kind of based it off of this candle close right here on this daily. But if you run this across the whole chart, It's pretty interesting how, I mean, you could stare at this for a while, and it's provided both strong support. It bounced off here, came back, bounced off again, finally closed below it, and then it basically flipped it to resistance and held as resistance for a bit. It had a bit of a false break here, but it came right back down within a few days and continued to hold it as resistance, coming all the way down here before finally blowing up through, then blowing back down, and now it's serving as resistance again. It had a false break here, a rejection here, and so far we've got a rejection here. So kind of just an interesting level to pay attention to. It doesn't really mean much beyond that, but you'll notice it. I guess kind of the thing I would do with this is I would have this as a reference, and so going forward, I'm going to look at this level to see, oh, we're back at this level. Is it going to hold this time, or is it going to flip it? Is it going to be a false break? What have you. So anyway, right now it's resistance. So we've got that as resistance. We've got this trend line as resistance. Another kind of thing, just looking at this, I know when we see these big days, actually, let me kind of declutter my chart here for a second. So, like a few things, just looking at the Bollinger Bands, for example, really all this is, it came down, it was at the top, it basically mean reverted back to the middle, and then it's gone and done almost exactly 2 standard deviations and stopped right at the top of the bands and is probably set to mean revert back to the middle again. And that's kind of what you see a lot in a sideways or really any market. It does that. It just goes from the extent of the band to the middle until there's some kind of a breakout move in either direction. But that's all we're seeing here is kind of nothing in a way. It's like, yeah, we had a bit of a pump yesterday that ultimately ended up closing again below the center of the band, the 20-day moving average. Then we had a big pump today, and really it's already back at this resistance level, and it may possibly, I wouldn't be surprised to see it even close under the 10-day or back around the 20 by the end of the day. We've still got 5 hours left to go today, so. Really, again, it's based on the dollar index, and which is based on liquidity, and liquidity is not doing much. So it's just kind of it's more of just like a technical move. It's not really based on, this isn't representative of new buyers coming in or anything like that. This is just kind of, market makers and things bouncing around, and this isn't anything. It's nothing to say, oops. It's nothing to say, the trend is changing or anything like that. So I'm really not putting any stock into this. Yeah, that's kind of it as far as price action goes. I mean, there's, we had a little bit of a bump the last few days. So far, it's nothing. So far, it's not anything beyond just standard price action. 2 deviations, mean revert, 2 deviations, mean revert, that kind of thing. So yeah, anyway, but I did want to kind of look at it from a little bit, zoom out, look at it, like I said, do sort of the bullish and the bearish approach and see if I can see, make a case for each one of those things and what that would look like. So I'm going to start on the weekly, and let's kind of do the bullish position first. And so when I look at this, a couple things stand out to me. One, we haven't really made any lower lows. We've had a lot of things like the stock market. If you look at it, it's ugly. Like it's flipped. It's been having lots of ugly days combined with the dollar index just pumping, in that same time frame. Bitcoin, however, hasn't really, yes, technically it's reversed on the 20 week. But it's not setting new lows. It's basically holding here. It's holding this support. And I think this is actually a really important level, because this level here, is even more important. And I think if it loses this level, like I've said, that's bad. It's probably, there's not really much to hold it between here and here. So the fact that it showed this relative strength compared to the rest of the market is bullish to me, is positive to me, that it's holding this level on weekly timeframes, and that's strong. There's a lot of economic indicators out there that should be driving the price of Bitcoin down. And it's just not. It's holding steady here. And what else? What else is bullish about this? That liquidity is going down, kind of like I just said. In terms of economic indicators, liquidity is going down. Bitcoin isn't. Bitcoin is just holding. It's sort of opening this kind of chasm that we see here. This, whereas, for a minute they were kind of right in line, and then Bitcoin, they deviated, and now Bitcoin is just going sideways and liquidity is continuing to go down. So that's bullish. Also, we've got this, bullish, the last, in terms of the weekly time frame, the last divergence indicator we have on the chart is a bullish indicator to the upside. Now, that doesn't mean it's going to go to the moon. That could only mean that, it goes back and touches this bull market support band, this 20-week moving average. I don't know. It doesn't, you don't get that from that indicator, but the fact remains, the last divergence indicator we've had is a bullish indicator. So relative strength, I think, is a positive for Bitcoin. Maybe you could also look at it as apathy, in the sense that, it hasn't gone down just because kind of people don't care. The people that have bought have already bought, and the people that have sold have already sold. And right now, all we have is just kind of the people playing the derivatives game, just kind of jockeying the price around. And otherwise, this, I saw a post the other day that, particularly like in the last month, the spot trading ratio to spot versus derivatives has just gone through the roof, and it's almost all derivatives right now. There's like really no spot trading going on at all. So that's kind of reflective here, and I think that's showing that there's not buying or selling happening, and the movements are based just on the perp market and things like that. So is apathy bad? Not necessarily. It's not good either, but it means that it's better to go sideways in an otherwise sort of bearish sort of market conditions than it is to go down. So I'll take that, that's great. Did I want to look at any other time frames? Let's see. Is there anything in terms of like a cycle standpoint? It is pushing to the upside. We've got more touches to the upside than we do to the downside. That's also could be construed as bullish. We've got this one sort of false break. We've got this level here. We had one false break to the downside, but we've got 1, 2, 3, to the upside now. That tells me that, there's more people wanting to buy than wanting to sell. That it's more people kind of pushing it upwards. Granted, it hasn't broke through, but that's an observation you could make that could be construed as bullish. Also, you could argue that, we're this far into the cycle now. Let's see. What's the timing here? $37 days into the cycle now. Some of these cycles have been relatively short. Well, we had this 45-day here, I guess 52-day here. You could argue that typically by this point in the cycle, we should be seeing some downward price action. We're not. We should be seeing some lower lows. We're not. That's interesting to me, but I don't know. The other argument that you could make is that, at least from a macro standpoint, everything is very tenuous right now. Everything is just very overextended. The bond market is insane right now. Bond yields are insane. That's putting all kinds of pressure on a lot of things. And, something is going to break sooner rather than later. That doesn't really apply, like just from looking at this chart from a technical standpoint, but there's arguments to be made everywhere, legit arguments to be made that the current market situation is just untenable, and it's only a short matter of time before everything nukes, and the Fed has to pivot and start injecting liquidity into the system. So that's kind of, I guess, the bullish case. I think, you know, my bias has been typically right now to the downside, and I've explained that in a number of ways over the last month or so. But what I'm seeing here in terms of bearish, whatever, is we haven't been able to pass this trend line. The bull market support, we flip below the bull market support band, we flip below the 20-week moving average. And that constitutes, you know, a trend reversal. We've also, has it flipped? Let's see. Let me get rid of this trend line here. It's kind of mucking things up. Okay, also the 10-week moving average has crossed below the 20-week moving average. Price is trading below both of them. That's a textbook downtrend. I mean, that's just, there's no other way to say that. That's just a textbook downtrend. That's all there is to it. Price did kind of bump up higher than the 10-week moving average. We can see briefly, but it hasn't closed above it. I know last week it came up and just had a perfect touch on it. This time it has exceeded it a little bit, but it hasn't closed above it yet. So that's just kind of noise so far. But, you know, in terms of like trends, we're still just in a textbook downtrend. And until proven otherwise, you know, until we start seeing convincing weekly candle closes above this 20-week moving average. I mean, that's really kind of all there is to it. Also, we need to see liquidity reverse. And until that happens, this is going to be what dictates my bias, you know, is liquidity coming up and a convincing trend reversal in actual price. Now, in terms of how far down we could go, one thing I was doing is, you know, I looked at this and I'm like, is 20,000, you know, I'm kind of looking at 20,000 as, I don't even have, actually I haven't marked here, but 20,000's right about, whatever, right about yay. A tick above the bottom of this wick here. I have that kind of marked as sort of the logical landing spot. And when you look at this, you know, that seems like a long ways down. In fact, even from just right here, right now, that's, what are we looking at? That's 25%. Already in a downtrend. Now, how does that match up with some of this other stuff I was looking at? I think it's here. You know, this is kind of what I was figuring in terms of like the last time we had a death cross and a 25% down. One thing I did though the other day is I kind of zoomed out a bit and just sort of looking at things on the monthly to kind of get a little bit more context. And the last couple times, now I wanted to focus specifically on the pre-halving year and the run up that comes out of the bottom and, you know, what it looks like coming into the end of the pre-halving year. And so if we go back to here, this was 2015. I didn't actually measure these. Let's see. Not that this matters, but that's a 49% dip. That's a 51% dip. But even without doing these measurements and looking at the actual percentages, just look at the boxes. I mean, look at the width of the boxes and then look at this box here. So this is coming down to 20,000. And, you know, in context, when you look at this box here and you look at this box here, that doesn't look very big. That doesn't look big at all. That doesn't look like, it's like, great, fine. I'll take that. That's way less than this one and this one by roughly half, you know? And so in that sense, seeing a 20% decline, or seeing it come down to 20K rather, seems just like nothing. Seems like, okay, sure. It's like a blip on the radar, you know, just moving right along. It looks way different here than, you know, when you look at it here and you think, oh man, that's a long way to fall. That's huge. That's big price movement. That's like, you know, a couple of months worth of these big green candles kind of thing. Yeah. But also that's not even a new low. And that's just nothing. So do I think that's going to happen? Who knows? But I don't think it's a very big deal if it does, and this is why, you know. So yeah, 20K. I even drew a little like trade overlay. Let's see. I put a little trade overlay because I thought that might be kind of funny, fun, whatever. So I sold, you know, my stack at 26,250. So I put that as my entry. I put my stop level at basically the bull market support band, the 20-week moving average, and then I put my 20K at my bottom, and I put, you know, out to the end of the year basically as the extent of my overlay box here. So yeah, I'm kind of looking at, you know, somewhere in this box, it comes down and it touches here before resuming upwards. And that seems pretty realistic, really. Not out of the realm of possibility at all. You know, of course it could be wrong. And really, obviously I don't have like a stop loss in place or like an actual order on the books. More, I'm just looking at this, like if it starts closing convincingly above this bull market support band, this 20-week moving average, if we start getting like a couple of hefty closes and it looks like trend is starting to reverse, yeah, I'll buy back in. That'll get my attention. Kind of be a bummer, but you know, I'm not going to wait until it comes up and sets new highs here or breaks out and sets a new yearly high or anything like that. I'm going to look to get back in pretty quick. And I know it's easy to say that and watch, you know, I get one of these, but I just don't see one of these happening right now. Even if we get an ETF approval, which that's starting to look less likely. Earlier this week, we had, so there was two particular ETFs out of that big lot of 8 or so that were on a little bit of a different time schedule. Like they didn't all apply on that same day, like we got the big core 6 or so that did, 6 or 8. And those actually were prematurely delayed yesterday or the day before, even though their actual deadlines aren't for 2 or 3 or 4 weeks. I think like 2 or 3 weeks from now. So that was interesting to see. The SEC just came out and just delayed them already and pushed them back to January. So you could argue that had maybe something to do with the looming government shutdown. They just wanted to kind of clear their plate, and this was sort of easy. This wasn't the core BlackRock, you know, Fidelity group that had applied. These were, if you want to call them outliers, whatever. And so they just kicked the can straight away, like without even waiting until the deadline. I don't know if that bodes well or worse for the rest of them or not. I don't know if they're going to wait until the actual deadline coming up here on the 16th and the 17th, or if we might get news before that. But it doesn't look good. And it's starting to kind of make more sense in terms of just with everything else going on right now in the government that it would, you know, they would just kick the can to January. I think the consensus amongst a lot of people is that this seems unlikely, or it's growing less likely, I should say. I know the two Bloomberg guys that tweet a lot about, the two ETF Bloomberg guys, they still are giving it a 70% chance that we get this approval happening on the 16th, but even they're kind of reevaluating that right now. So, you know, barring that, just this looks like it makes sense to me. And of course that has to do with having a bullish bias or a bearish bias. But of course the bearish bias is coming from the chart technicals. The chart technicals are saying we're in a downtrend, and that's black and white. That's not like open for interpretation. That just is what it is. And until it proves otherwise, until the actual trend reverses, your bias has to be to the downside. Yes, you can argue that the macro fundamentals could be a catalyst for a trend reversal, but until that actually happens, the chart is to the downside. So, yeah, I mean, that's what I'm looking at. So that's how I'm playing it. And like I think I said, even in my last video earlier this week, you know, ETFs do get approved. I think we get, you know, a pump up and then a fade back down basically to where we are right now. So I just would be shocked if we set a new yearly high at this point in the cycle, at this point in the game. It just doesn't make a lot of sense to me from a technical standpoint. I don't know. It's kind of all there is going on right now. There's not a ton otherwise. I mean, I could look at some alt charts, but there's not a few. ETH has had a bit of a pump, interestingly, but that doesn't, it's, I guess actually let's look at the ETH Bitcoin chart. We've had this that I've been showing. It, it did set a new low. It has come back and is sort of holding support now on the monthly on this at the bottom of this channel here, right here and right here. It's holding support, but I got to say, the month closes out in a couple of days. And even if it holds support on this level and doesn't close below this level on the month, this is still not great. I mean, these last several candles in a row have basically just wicked down and come back and closed at this level here. And so even holding support here, but closing, down here is still not great. That's still a downtrend. And so, yeah, like I said, ETH has kind of reversed a little bit on the daily, but not, who cares? Yeah, I don't know. That's kind of it. In the grand scheme of things, I mean, there's been some alt movements here and there. There's a few charts I'm paying attention to that I've touched on, but the bottom line is really, I think this is what everybody needs to be paying attention to: is the dollar index, the liquidity, the net liquidity, and that's what's driving the boat. So everything will do as they do, and right now they've had a bit of a pump up. And they may continue to, like, the dollar, if the dollar does continue to correct a bit, we might see some closes above here. Actually, let me look at that for a second. One thing I did want to kind of point out on that is, let me see if I have a cleaner chart. I'll just use this chart here. So regarding the bull market support band, it's not actually too terribly uncommon to, maybe I just do this on the weekly, see if it shows up. I mean, here, well, like looking at last cycle, for example, actually, let me do the full index. Just okay. Looking at last cycle, we had a wick above it here, above, it closed down below the support band. Then we had a wick above it here. Then another, actually fairly convincing reversal. Granted, we had COVID, and so I guess take this one with a grain of salt. But we did have two closes above it before, it ultimately held. You could argue that were it not for this, it may have held it the whole time, and that's fair. But, it's coming back here too. First we were actually under it for a while. We poked above it, closed below it. I guess my point here is that it can come above it and still not necessarily mean it's trend reversing yet. So one thing I'm curious about, no, when did the green flip back over here? Okay. So that's something I'll be looking for, is on this support band, we've got the two moving averages. That's maybe one of the first signs I'll be looking for. So the bull market support band consists of two moving averages. It's the 20-day simple moving average and the 21-day exponential moving average, which is the green line here. And so one thing you can look for that will be sort of the first sign of a potential trend reversal is to see the green band flip back over the red band. And so far, if anything, it's diverging, kind of like we saw back here. Eventually this flipped over here pretty convincingly, and sort of, when I saw that would have been like, okay, this is probably time to buy in. And again, were it not for the Black Swan event here, this probably would have held. So I guess that's something I'll be looking for, is the green to flip back over. What was it looking like back down here? Boy, this one's a little bit different. Really, the green was just kind of over the top of it for most of it, honestly. Anyway, yeah, I don't know. Just kind of digress here a little bit. So yeah, having it wick above it is one thing, but like I said, I'll first be looking to see if this green band, the bottom band, reverses back over, and that'll be a telling sign for me. That'll sort of give extra confluence once we start closing above it. If the green is if the green swaps over and we're convincingly closing above it on the weekly, then I think that's worth paying attention to at that point. All right. Anyway, I think that's about it. I'm kind of just staying put for now, not really doing anything. I expect this to hold as it is, even if the dollar index. Okay, here's an important thing to keep in mind. If the dollar index is really what's ultimately driving all this right now, you have to weigh that. You have to know that, because you have to know that if we start setting higher highs here, this isn't because of Bitcoin strength. This is because of dollar weakness. And so the narrative for Bitcoin hasn't changed. All of the sentiment for Bitcoin is still well down. All of the social indicators and social sentiment is still way down. All of the on-chain activity is still way down. All of the centralized exchange activity is still way down. So those are the things you kind of need to pay attention to in terms of, does Bitcoin have strength on its own? And right now it doesn't. So just because this is going up, you have to look at what is driving that. And right now, this is driving that. So don't be thinking, oh, well, it's time to buy back in. Everything is rocking now, because it's not. You need to be looking at all these other factors that sort of come into play here. So I'm staying put for now. Anyway, all right. I think I'm repeating myself. So that's about it. Thanks for watching, everybody, and have a good weekend. And I'll see you on Monday. All right.